Hey there, welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at what makes them do what they do. I'm Pete Townsend, your co-host of Money Never Sleeps, along with Owen Fitzgerald. We're doing another edition of Money Talks this week, expanding beyond the interview format to cover content from recent talks and features we've done. This episode of Money Never Sleeps is kindly sponsored by Ireland's fintech and financial services recruitment specialists, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with the team at Top Tier Recruitment. You can find them at toptierrecruitment.com and tell them we sent you. This episode is part 2 of the 2-part feature with Matthew LeMerle from blockchain Coinvestors on his blockchain predictions for 2020, with part 1 covered on episode 71. So let's just keep the chains moving with this week's episode of Money Never Sleeps.
Money never sleeps, pal.
Moving on to number 7, pro traders will embrace sophisticated exchanges. I'm going to talk about that one a bit.
Yeah, so this again is this is sort of another adoption curve issue. When we bring new financial products to the market, we begin with version 1, and then over time, sophisticated traders and investors expect superior and better functionality, and we go to version 2, and then we go to version 3, and so on. And so if we took the example of digitally enabled public equities and algorithmic high-frequency trading, today we're in a very sophisticated place, but it didn't begin that way. So in the case of cryptocurrencies, when they were new to the world, there were only very simple ways to buy and sell them, and you had to own your own keys and be your own custodian, and we bought Trezors and other devices to try and help in that process. Then we had people like Coinbase and Kraken and blockchain.com beginning to make it easier for you to open an account and buy and sell these assets. Well, sophisticated traders want much more than that, and they want it right now. So they want combined order books and better price discovery, and they want sophisticated trading algorithms that allow them to trade anonymously so that the other side of the counter side of each trade doesn't see what they're trying to do in terms of volume and direction and so on. And they want much better and broader data. And so all of this means that they need, at minimum, prime dealers, and one day they'll probably want prime brokers to support their crypto trading activities. And so we're beginning to see people like Amber in Asia and SFOX and Tagomi in America and Europe pulling ahead because sophisticated professional traders can't do their work on a relatively simple retail-focused platform. And at the same time, it's very hard for a Coinbase or a blockchain.com to also be a prime broker, because if you are an exchange, it's hard for you to also say that you are independently and objectively channeling trades across all exchanges. So in traditional financial services like a foreign exchange, we don't allow the prime dealer or the prime broker to also be a very large exchange. These two roles have to be split. And I think that's what's going to happen in 2020. So we'll have very large exchanges, and then operating across them, we'll have crypto prime dealers and potentially crypto prime brokers. And I think the largest, most sophisticated traders will go to the latter, and the retail clients will continue to go to the former.
I agree. And I think seeing that happen is a very good thing, because going back to number 5 and all of the efficiencies that are unlocked by deploying blockchain and back offices on the traditional side, that by dealing with multiple exchanges and having multiple back offices that are supporting all of your trading on the different exchanges, you're just adding more reconciliation and more inefficiencies back into the process. So yes, we need to see that streamlining happening, and where you can trade across multiple exchanges from one platform and have it all contained in one package for you. Moving on, number 8, enterprises utilizing hybrid blockchains. Can you dig into that one a bit?
Yeah, so we're nearly finished now, I know, and I'll be very quick on this one. But when blockchain was first around, obviously it was all about public and distributed, and clearly there are great advantages to public and distributed. But it's very hard for the world's largest players to participate until public and distributed has proven itself. And so we've had the last couple of years this ongoing debate about public v private. And I think most of the big institutions we've already talked about have begun with private. And meanwhile, those of us who operate in the long tail and in the distributed world have been focused more on public. Now, in practice, it isn't a binomial choice. It isn't public v private. If you look at cloud computing, for example, we eventually created hybrid, and hybrid was a world in which some of the functionality was private, but the public cloud provided certain capabilities, especially around scalability and cost efficiency. And so in practice, cloud computing today is mostly hybrid. Well, in the case of blockchain, pretty sophisticated people are beginning to try and figure out how to do the same thing. So how do you use the public network to give you decentralized verification and time stamping and immutability and so on? But how do you use private networks to allow an awful lot of the work to be done in a more efficient and high capacity way? And then how do you bolt the two things together? And that is the notion of hybrid blockchain. I'm not going to say anything more about it on this call, Peter, just because I don't want us to go down a rabbit hole. However, the what gets blockchain and distributed ledger broad global acceptance, I think, is the creation of new hybrid ways where large companies and even governments can leverage the public portion of blockchain whilst at the same time gaining the capacity and speed that they need, which at least in this time frame may require them to have some aspects of the computing being done on private networks.
Absolutely. And in the slide deck that accompanied your webinar that I had to look through, and again, we'll include the link for that in the show notes. I really like the way that you laid that out in terms of the hybrid public and private blockchains. I think that makes a lot of sense. And I think that is that's one to watch to see, to see examples of that out there in the market. And there's a couple, like you said, that we could dig into, but that's going down quite a big rabbit hole.
Yes.
Yeah. For number 9, more than 5 blockchain unicorns will emerge. What are some of those that you're looking at that you think would be good examples of that?
Yes. So this is, now I'm putting on my investor hat. So as an early stage tech investor based in Silicon Valley, we know that emerging and early stage technology is one of the highest performing asset categories in the world, but it's also a hit driven business. And what we mean by that is, a typical VC, if they make 30 investments, 3 to 5 of them will really drive the returns of the portfolio.
Yep.
Another maybe 30% will do just fine, and maybe 50 or 60% will fail. So you have to monitor the hits and see to what extent are there emerging, very valuable companies coming out of an area of technology, because that drives a lot of the interest further upstream, if you will, in the investment stages. So as investors, we care about that issue. Are we seeing the emergence of large, valuable companies where they're really justifying the early stage investing and making the returns attractive? And in blockchain, we're beginning to see that. So if we went to 2018, year-end 2018, there were 9 unicorns globally. By just a month ago, there were 15. And we think that there will be even more as we look ahead to the end of this year. We're making a prediction of 5 new blockchains. So we think we'll get to 20 globally by the end of the year. I actually think that's a rather conservative estimate, but I'd sooner be right on this prediction than wrong. So we left it at 5. I'm not going to name specific names, so I don't want to make a point prediction. But suffice to say, we were all very excited when Figure just did its recent round, and we think there's a lot of companies like Figure in the combined portfolio where we're investors. Peter, that we are LPs at places like Blockchain Capital and Pantera and DCG, Castle Island, One Confirmation, and others. And so the combined portfolio that we're monitoring is across all of those blockchain VCs. And I do think that there's a good number of emerging companies that could be worth more than $1 billion by the end of 2020. So that's the spirit of this prediction, but I don't want to turn it into a point prediction. I'm a believer in diversification. So we think the category will yield some very attractive unicorns, and we think it will be sufficient to justify being early stage investors in the space. And that's really the spirit of this prediction.
Yeah, absolutely. There's a number of names that I'm tracking and that I'm watching, but merely these are down to understanding what they're doing, but also then seeing on Crunchbase how much money they're actually raising. Where a $25 million Series A is not out of the question for some of these companies, or even over $100 million in their first fundraising. It's there's a lot of money being poured into these things, and hopefully they will turn those into unicorn businesses, which would be great to see.
Yes, and there is a convergence of the predictions that we've already gone over happening here in this 9th prediction, because two things have to happen. So we're investors, as I think you know, in 8 of them: Coinbase, Ripple, Kraken, Circle, and so on, Definity, Figure, and so on. And on the one hand, they have to demonstrate that they can stand up real businesses on top of blockchain technology. And if you look at some of them, Coinbase or Kraken as examples, they have millions of active customers, and people are beginning to notice that. But the other side of the coin is that large established companies need to step in and embrace the space too. Not least because most of the exits tend to be acquisitions by large companies of the smaller disruptive companies. And we're definitely seeing the biggest financial services companies, corporations, and even governments stepping into the blockchain space now. And for us as traditional investors, we find that a very exciting thing. And we think that the perceived value then of the leading companies building on blockchain actually will really drive the value. So I think that a prediction that says 5 new blockchain unicorns and we go from 15 to 20 is a very modest prediction.
I agree. Definitely modest. I think there's a long road ahead of us, and there's a great deal of temerity that's going to be required as an investor to continue steering. But I think in the long run, I see digital markets, digital financial markets, as where we're headed. So I definitely on the same page. Last one, highest returns will still come from early stage, and I think that is that is part of your MO.
Yes, and there's nothing needed to be said on this one. It's a fact. Fixed income and public equities over the long term earn you nowhere near as much as early stage technology investing. Ironically, most people in the world put most of their money into fixed income and public equities, and most people have little exposure to early stage technology. So they don't put their money where the facts say they should. I never really understand why not, but this is not really a prediction. It's a fact. The highest returns come from early stage technology.
Okay, Matthew. So that's 10. Really appreciate you bringing through all that. And we will probably explore these a bit more as we go through the next few months. But just kind of as a follow-up to your 10 predictions, which one of these out of the 10 do you feel the most strongly about personally? Obviously, other than number 10, which is part of your modus operandi.
Yes. Thanks, Peter. Well, For me, it's the first, because I think that we've lived for a number of years now in a world in which the people that control the world's largest companies, the most of the world's assets, the most of the world's monies, have not really believed that blockchain and the blockchain protocols can actually meaningfully improve the world that we live in today. And I think that point of view has now lost out. When governments like China say that they will embrace a digital yuan and that blockchain is going to be part of their next 5-year development plan, then it's not possible for people to be naysayers any longer. The weight of those decisions was taken last year. Now, the implications for all of us in blockchain may be a long time coming, but I know that they will now happen. You can't have digital monies, sovereign digital monies, without the infrastructure to support those digital monies. And that means that we will have wallets and exchanges and trading platforms and payment systems that are able to take cryptocurrencies and crypto assets. And that in turn will mean that the world's largest payment players and the world's largest investors will start embracing blockchain-based solutions. So I feel like that is the top of the stack in terms of its implications for all of us. And I think the world's central bankers, the world's corporate leaders are now on board. Now, that's still a centralized world, and I know we could have that conversation about centralization v decentralization, but I think this is the one that really has tipped us into a new phase of blockchain.
Yeah, and I think that's the one that's going to increase the adoption of digital assets and cryptocurrencies quite a bit as well. I was reading something from Nick Carter from Castle Island Ventures today where he talked about the real growth and rise of cryptocurrencies and digital assets will come when people will need to have them in order to do what they want to do, whether it's play a game online, whether it's buy something where they only accept certain currencies. And that will be when we see an increasing and almost global level of adoption here taking place.
Yeah.
So just following on with that, when you think about your own investors, Matthew, which of these predictions do you think will deliver the most value to them?
Yes. Well, so that was the 9th one, which we talked about, the emergence of blockchain unicorns.
Absolutely.
Our investment thesis is that there will be a number of very attractive companies, protocols, networks created on top of distributed ledger technology. Our goal is to get some of our capital into the largest possible portfolio of those opportunities. Our specific approach is to be LPs in the world's leading blockchain VCs. And then we have this notion of the combined portfolio, and we're looking to see the blockchain unicorn surface. So I think right now, through our partner funds, people like Blockchain Capital, Pantera, and so on, as I've mentioned, we're investors in a little less than 100 blockchain companies, but we're also investors in 8 of the blockchain unicorns. So the yield rate, if you will, is tracking better than we would have hoped. And that ultimately is what makes the overall investment return such a good one. So I need to see more other investors agreeing and marking up the rounds of the companies we've backed already. And eventually we'll have to see exits. And those exits will either be, well, they could be a variety of things. They could be the traditional ones of exit to a public market or exit to a corporate acquisition. But obviously in this world, we can also have more distributed ways for these companies to capture the value, and liquidity can occur earlier if the assets are traded assets through security tokenization like Securitize and others provide. So So I feel like that's the one that's really making the most impact from an investment point of view.
Yep. I definitely see that as well. Finally, Matthew, last question. When you think about the entrepreneurs solving the problems that unlocks the value in this whole space, what do you think will be the biggest obstacle for them to the scalability of their businesses?
Yeah, and so that's where prediction 8 was important, public v private v hybrid. A huge amount of work is going on in the blockchain community, of course, to increase the throughput, peak, and scalability of the blockchains with which we're working. And we know all about, what Bitcoin and Ethereum and others are doing in that regard. But it's really hard. It's really hard for them to take something that is completely open, immutable, and accessible by anyone and make it very fast and very cheap and very energy efficient and so on. So in practice, I am a big believer in the notion that we will have to triage and pass the work. And some of the work will be done on public networks and some will have to be done on private networks. Well, that is a lot more complicated than it sounds because you have to create these hybrid blockchains that, or at least these hybrid computing solutions that know how to seamlessly move the work back and forth and so on. And people are working on that. I think it will happen. But until it happens, I think that the established world has a fair criticism when they say, we can't put all of the transactions of VisaNet or SWIFT onto a slow, clunky, energy inefficient blockchain. There is some truth to that. So, and also there's some truth to, if I'm going to have to build a private blockchain, why wouldn't I just turn it into a private database? Why do I need all the other functionality if by going private, I've lost the benefits of the distributed trust and so on? So hybrid blockchains are, I think, the solution to the scalability, speed, and efficiency issues of blockchain. And I'm hopeful that we'll see a lot of forward momentum in 2020 as the computer scientists really get to work on that topic. But without it, I do think it's going to be hard for the world's largest applications to be run on the open distributed blockchains that we began with. And so I think that there'll be some resolution to that issue this year.
Absolutely, yeah. And it'd be what's quite encouraging, Matthew, as well, is that the problems in the traditional technology world that took 10 to 15 years to solve, just being in this space now for the last 5 years in blockchain and distributed ledger technologies, just seeing how quickly that it's moving and how quickly the technology is developing and that people are solving these hard problems and cracking these nuts, it can be mind-blowing. So, someone that's been in this space for 3 years, is the equivalent of having a 20-year career in traditional finance, right? And it on the technology side of it. So it's, that is encouraging, but what counters that is really just the slow pace of adoption and change of the regulated players out there. But soon enough, this will become perhaps a life issue for them, a political issue for them, but that's a topic for another day.
Yes. Well, my closing thought would be, all of this is a little bit predictable in the sense when we look at the arrival of all emerging technologies, they do go through a somewhat predictable life cycle. And as more people begin to work in the area and more sub-issues get solved, so the people that come later get to cut and paste pieces of solutions together and mash things up. And their own work gets accelerated as a result. And that's sort of how we see people begin to accelerate in actually making new technology ready for prime time. And I think blockchain is distributed ledger is definitely at that point now where people are beginning to understand more easily what it can do. and they're getting the opportunity to cut and paste a lot of the work that others have already done before, and things are now accelerating and happening faster. So I agree with your comments. I think 2020 will be an interesting year. At the same time, I do know that for people who have very short expectations and timeframes, it may still appear as if things are moving slowly. But from an investor mindset, we're taking the 3 to 5 to even 10-year view, and we're very excited by the pace that we're seeing.
Yeah, that makes a lot of sense. Well, I think we'll wrap it up there, Matthew. Thank you so much for coming on to the show. It's been great to talk through these things with you, or coming back onto the show again. And hopefully on one of your next trips across the pond, I will find myself in London at the same time as you are, and we'll get to have that far elusive cup of coffee that we've been talking about.
Yes. Thank you, Peter. Thank you for having me again. And I hope this was valuable to your audience. And I look forward to meeting in person, as you mentioned.
Excellent. Thanks so much.
Okay. Bye-bye.
Money never sleeps, pal.
That does it for this week, folks. Thanks to Matthew for opening up his mind for part 2 of his blockchain predictions for 2020. Make sure you check out episode 71 for part 1 of this 2-part feature. Links and show notes for this episode are on moneyneversleeps.ie, so check us out online. Remember, if you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with the team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com. Also, thanks to Conan Brophy from Create Sound for editing this podcast. As for me, I increase the odds of startup success. Get in touch through the contact page on norioventures.com, and you can follow Owen Fitzgerald on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.